Hello, everyone. Today is Friday, the 8th of February, 2013, and this is Brian Shannon from AlphaTrends.net speaking. We had another positive week for the markets, although we did come down and test some key support levels once again, but the markets have held those support levels consistently. Earlier in the week, we had a test of the 149.5 level, and then on Thursday, it looked like maybe we needed to be a little bit cautious as it broke below 150.5, but it did quickly recover, and today we saw the markets rally once again. So the theme continues to be that the market is holding above key levels of support and that we are above rising moving averages. There's a lot of reasons to think that the market's extended or it might be weakening at certain times, and at those times it pays to be extra cautious. But I've been saying consistently, it does not mean it's time to get short. It means to make sure you have your stops in the right places. Maybe wait for a little bit of confirmation of strength before you add to any new longs. But the market is innocent till proven guilty. And for the week, let's take a look at the numbers here. We had the S&P 500 up 0.37%, Nasdaq up a half of a percent. Financials were down just slightly, and otherwise, we had once again we're continuing to add to the gains that we've seen this year. I think that the 149.5 is going to be the main level of that we want to see hold next week as well. That is where we have the rising 10-day moving average as well. But I think that probably near 150.5 is where we would start to get cautious. Early in the week, we want to see 150, 150 hold because that was the prior little level of resistance. So it would be nice to see that hold as support. And I think you give it actually to about 151 and a quarter to 151 and a half. If it breaks down below that, holds below it for more than a half hour, then we'll probably see that 150 and a half level. But until then, the story remains innocent till proven guilty. We've got these real nice longer term uptrends, and the Nasdaq finally broke out of its range. We've been talking about this, this market basically being a waste of time as far as the index itself goes. Well, it's been under this level of resistance and holding above the key support at 66.15. So 66.15 right now, incidentally, is also about the location of that rising 50-day moving average, which means if we go down and test that at some point again in the future, that it will add to the significance. Right now, I don't think we need to worry about, though, that what we want to see instead is we want to say, where does it have the potential to go? And it's looking like, the next area up above 68 and a half or so is where this market looks like it's poised to go. Obviously, or maybe not obviously, but next week we want to see that, if it gets back into this range, a little bit of caution, but we want to see it definitely hold above 67.50 next week. If it can do that, it's innocent till proven guilty, and we want to look for continuation of the higher highs and higher lows. I thought that maybe Apple would flush lower this week, as I was talking about that last Friday, that Apple might take out these lows. That was a scenario I was looking for, and then I thought we might get a nice tradable bounce. Instead, what we saw was an alternative scenario, which I laid out on Alpha Trends, which was on Wednesday, that we would pull back down to the conjunction of this 5-day moving average. That's the orange, and the purple is the volume weighted average price since the stock gapped lower on earnings. So we had this rally off of those lows. We pulled back, found support right exactly where we're supposed to, and then we saw a very strong bounce on some news, and then that news continued to come out for the stock. But right now, Apple is it's still a broken stock. It's experiencing a nice bounce. It broke some resistance here and is above a rising 5-day moving average. But when you look at it in the overall bigger picture, it's up to a declining 20-day moving average. Maybe it goes to fill the gap, but again, not all gaps get filled. Some people are still that bought over here are still waiting for that gap to get filled up at $690 a share. So don't believe that all gaps have to get filled. They simply do not. These gaps over here didn't get filled from these couple days lower as well. So you'll see a lot of people say, hey, we're going to fill the gap, and acting as though they have some kind of certainty as to what Apple is going to do. No one knows for certain what's going to happen. If you're going to trade in this stock or for any stock, the strategy remains the same. You look for the cues from the market itself. And for the markets, for the Russell 2000 as well, we remained above the key levels of support in there. We were talking about 88.75 to 89 being the key level for this past week. We obviously held there. I think that next week we want to bump that up to say we want to see at least 89.50 hold at the worst case next week. And early in the week, it would be ideal to see about $90.60 hold. It wouldn't be a concern if it dropped back down in here a little bit, but it does, just give us a little bit of reason to say, okay, maybe it's starting to slow down. We've got some trend lines intact that perhaps a longer term, a bigger pullback, we would see those. But again, there is simply no evidence that this market is pulling back. You can talk about volume, you can talk about divergences, or whatever your key oscillator or indicator is, but the markets continue to hold. The semiconductors, they held above their key level at $34.60. We came down and tested it, and that's reason to become a little bit cautious, but it's not reason to certainly get short. The trend remains higher in here as well. We are headed, it seems as though, for a test probably of last year's highs north of $36 a share. This is a potential level of resistance. So far, it's showing zero evidence that it is, in fact, acting as an area where sellers are coming into this market. RealTick, as you know, is the sponsor of the Friday videos that I do and upload to YouTube each week. So take a look at realtick.com and give a trial to their software. It's not only this charting platform that I use, but a full-blown trading platform as well. The semiconductors, though, another good week for them. The financials, again, we're down very slightly this week, but nothing has changed here. We're still in a primary uptrend. We're above a rising 10, 20, 50-day moving average. We're at multi-year highs, as we know, and perhaps heading up towards $19, $20 a share. We held the key level this week, which was $17 and 50 cents on a closing basis. That's the level we wanted to see. So I think that we're slowing down maybe a little bit in these financials, but there's no evidence that that the sellers are in control, gaining any type of control whatsoever. Next week, I think that probably we want to widen that out and say $17.40. In fact, this week we were talking about $17.30. I just saw my notes there. We can bump that up a little bit to $17.40. If it holds $17.40, then the benefit of the doubt goes to the buyers. And if we break those levels, it doesn't mean run out and sell everything short. It means that it's time to maybe look for day trades on a short side, but certainly not to hold short positions overnight, because news and surprises tend to follow the direction of the primary trend. The primary trend is obviously still higher. These are the concepts we talk about every single day in Alpha Trends, where if you take a trial to it for a couple weeks, I'm sure that I'm not going to give you anything. That is, I'm not going to give you just winning stocks every single day. That's not the point, but I will give you a lot of great stock ideas, and you'll become a better trader by being able to consistently apply a method, a consistent method, that is, to the market that's based on market structure. So if you take a free trial, look forward to seeing you in there. If not, thanks for tuning in, and hope you have a good weekend.